Hi, I'm Michael Yardney, and the other day I was thinking, what would Warren Buffett say about my approach to property investment? And why would I care, you may be asking? Well, that's because Warren Buffett, who's 84 years old, is consistently ranked amongst the world's richest people, and he's arguably the most successful investor of the last decade, last centuries really. He's worth $74 billion. This means he's earned on average around $900 million each and every year of his life, which is thousands and thousands more times than the average worker in Australia. Anyway, I think he'd be impressed how I invest, because there are some similarities between our investment philosophies. Now, don't get me wrong, I'm clearly not in Warren Buffett's league as an investor, and in fact Warren Buffett much prefers investing in companies than buying real estate. And of course he wouldn't really bother himself with how I do things, so it's all hypothetical. But having said that, I've grown a very substantial property portfolio over the last 40 years. It's given me financial freedom. It's given me the choices in life that I want. So I thought it would be an interesting exercise just to compare. Anyway, here's what I've done. When I first started investing, I really didn't know what I was doing, and I made more than my share of mistakes. Luckily, around that time, the time I bought my first investment property in the early 1970s, Gough Whitlam became Prime Minister, and inflation suddenly became rampant. It rose from 5% to 15%. Now, it's amazing how rampant inflation pushes up property values and helps cover up mistakes. The problem is, one of the worst things that can happen to a novice property investor is to get it right first time. It gave me a false sense of confidence and invincibility. However, rising interest rates, a recession and falling property values in the early 1980s taught me a few important lessons. Fortunately, over time, I developed an investment strategy. I really didn't have one when I started. I use a 5-stranded approach to ensure I only buy the type of properties that will outperform the averages. So number one, I buy a property below its intrinsic value. That's why I avoid new and off-the-plan properties. They seem to come with a premium price. Number two, I buy in an area that's had a long, strong history of capital growth, but more importantly, that will continue to outperform the averages because of the demographics of the area. This will be an area where there are more owner-occupiers who want to live because of the lifestyle choices, and areas where the locals will be prepared to and can afford to pay a premium to live there because they've got high disposable incomes. The third strand is I buy the type of property that would appeal to a wide range of owner-occupiers because they're the ones that drive up property values. Fourthly, I look for properties with a twist, something special, something unique, something different or scarce about it. And finally, I buy a property where I can manufacture some capital growth by doing a refurbishment, by doing a renovation, by doing a development. Now, what's Warren Buffett's investment philosophies? As I said, Buffett invests in companies, not properties. And of course, not just any company. He has a set of strict selection criteria. Firstly, rather than investing in the latest fad, he invests in tried and proven industries. That's why he didn't get burned during the tech wreck of the early 2000s. Secondly, he understands the importance of timing and counter-cyclical investing. Thirdly, Warren Buffett doesn't buy cheap companies. He buys great companies with strong brand value and growth prospects. He said it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Fourthly, he buys these companies cheaply below intrinsic value. For example, he bought companies like Gillette and Coca-Cola at great prices, and he made an absolute killing. And fifthly, he buys companies with strong upside potential, and he invests for the long term. He said if you're willing to own a stock for 10 years, if you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Can you see some common threads here? So how would Warren Buffett buy Australian real estate if he chose to? Again, it's a hypothetical exercise, and I'm only guessing what he'd do. But if Buffett were buying properties in Australia, he'd probably look for 5 things. Firstly, he'd look for properties in an area with strong capital growth prospects. Number 2, he'd look for properties that he can buy for less than their true market value because he always likes buying with a margin of safety. Thirdly, he'd look for properties that are unique, special or different. Something that creates a level of scarcity, what I call a property with a twist. Just like Buffett bought Coca-Cola because its brand made it difficult for competitors to catch up with. Fourthly, he wouldn't chase the latest hotspot. And fifthly, he'd buy properties to hold in the long term and not consider trading or flipping. So just like Warren Buffett carefully selects his investment properties, if you want to become a successful property investor, it's important for you to develop a set of strict selection criteria for your investment properties. Let me finish today with a great quote from Warren Buffett. He said, "I'm a better investor because I'm a businessman, and I'm a better businessman because I'm an investor." I guess the lesson is strategic property investors treat their investments like a business. Now, if you'd like to learn how you can invest in the sort of properties that are going to outperform the markets, why not have a chat with the team at Metropole? With offices in Sydney, Brisbane and Melbourne, we have no properties for sale, but we've got access to every property on the market. So if you come along and have a chat with us, we can help you get into the property market, or we can review your current portfolio to see how you can do better. Just contact us at metropole.com.au. I look forward to being part of your wealth creation team.